Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
What does it mean to give generously? Well, that's one thing we're going to be talking about on today's program. I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well show, where we apply biblical wisdom to your financial journey. I'm joined in the studio today by my co-host and fellow financial professional, Jesse Hamilton. Hey, Jesse.
Hello, everybody. Hey, Mark. Welcome to the show, everybody. I'm glad you're listening. I'm really excited to talk about this topic today, give generously. It's just something that I care a lot about, and I'm excited for our conversation.
Well, you can call us or text us anytime on our special show number, 254-282-0495. That's 254-282-0495. You can also send us an email at radio@spendlifewell.com. And I think today, Jesse, we are live streaming on our social media channels.
Yes, we are.
That's something for people that are watching on Facebook or LinkedIn or whatever other places we're on. I can't remember. Jessica forgot to tell me where they were. But you can type a message in there and we can interact with you live on today's program. So send us a message at that number, 254-282-0495, or you can send us an email at radio@spendlifewell.com. We usually like to try to respond to those messages within 24 hours, and maybe even we'll select that to be repeated and answered on an upcoming show.
Yes,
so
we do that.
What are we going to talk about today, Jesse?
So we're going to recap some of the news since we last spoke. A lot of things have been changing. We have new inflation data from the CPI. We've had a lot of people call in and ask different questions. We're going to get to different topics like I-bonds and just what's going on in the markets these days. So it should be an exciting conversation, but let's get started here with talking about the Consumer Price Index, which was unchanged.
CPI.
Yeah, it was unchanged in July, but it's still high. The CPI is up 8.5% from a year ago. That's how the numbers work. It's year over year.
So year-over-year numbers there. Now, just because it was flat doesn't mean we don't have inflation, right?
Right, exactly. That's what the year-over-year number there means. There was not a change, but a high number to a high number is still a high number.
So is the inflation scare over now that inflation was flat for the month of July?
I don't think it's over, Mark.
Yeah, not by a long shot. Let's break down the Consumer Price Index data that came out. This is all from the Bureau of Labor Statistics.
Yes.
We like to read these economic press releases whenever they come out and make sense of the spin, because they do try to spin. They do try to put a positive spin on everything. But what was interesting here is that, yes, when you look at inflation on a year ago comparison basis, we probably peaked in June at 9.1%, right? But that doesn't mean that inflation is no longer a major problem. In the past 2 months, you got to look at the surge in June as well as the overall price level in July. Consumer prices are still up at an over 8.5% annualized rate.
Mm-hmm.
Now, this is no different than the 8.1% annualized increase in April and May. And that was before, Jesse, the spike and then the decline in energy prices.
Right.
So what was the big change for July that caused inflation to remain unchanged?
So we actually had a decline in energy prices of 4.6%, which is a relief for all of us at the gas pump. A lot of you have probably noticed that you go to the pump and your tank is going to cost less than last month, which is great.
I filled up yesterday for $3.19.
Wow,
at the
good.
HEB. Yeah, I was pleased. I still had to spend more than $50, but
you got a big tank to fill.
I got a big tank to fill. So, and the reason for that is, and we put this will be actually on our blog this weekend sometime at spendlifewell.com. But the reason is that consumption of energy things like gasoline have gone down 7.7% over this time last year.
Yeah, we had a really good chart in our monthly webinar last week where we talked about this, and you could actually see a visual representation of, people were buying less gas.
Yeah, and because people are changing their behaviors, right? Their habits.
Yeah, I carpooled I went up to a sporting event about 100 miles up the road, and we decided to all pile into a car, save gas. Instead of take two cars, we'll just take one. Every seat filled, but still, it's better than paying for more gas.
And we've talked to folks that had changed their vacation. I just read an article the other day that a fellow was going to take a vacation to Colorado this year and decided to cancel it. It was too expensive to drive, and it was too expensive to fly at the same time. So we're seeing that, and that's a big move. I mean, a year-over-year change in a decrease in consumption of gasoline of over 7%. That's huge, because this is the peak driving time. The summertime time of the year is usually a peak for driving and mileage and gasoline consumption, and so that's huge. Now, if you look at the details, one of the things that's still concerning. This is why I think that this is not over by a long shot. Is that you still had for the, I think it was the 7th monthly gain of at least 9.9% or over 1% of back-to-back higher costs in all 6 major grocery store food groups. Okay? So food was actually up 1.3% in July. That's pretty hefty. If you annualize that, that's well over 13% if this continues at this rate.
Yeah, that's a really good point. A lot of people don't think about that. They think a 1% grocery bill is a couple dollars, but 13% over a year, that can really change your lifestyle.
Yeah, it does. I mean, I read an article the other day that people are buying less beef and more chicken. Because if you've ever watched The Father of the Bride, Jesse, you know that the wedding planner talked about the chipper chicken, and the chicken is a little bit cheaper right now, and we may see beef prices continue to stay elevated for some time. Not because, partly because of inflation, but partly because all the farmers are selling their cows.
Yeah, we work with several agricultural people in our client lists and various connections around, but we're getting a lot of insight from people that things are different right now, and they're going to change even more.
Well, I mean, number one is we don't have any grass.
Yeah,
the cows have to eat grass, and so a number of folks are scrambling around trying to find hay for their animals, and it's just getting too expensive, and so a number of ranchers have decided to sell a significant number of their cows. Most of those end up going to the slaughterhouse, which means that there probably will be a shortage of such cattle, come later in the fall, or at least 6 months from now. So energy prices fell, groceries and things kept going up. So all in all, they kind of wiped each other out, right, Jesse? Wiped each other out and offset each other. Now, there was some good news in today's report besides the whole thing with being flat. I should have mentioned costs for new vehicles and stuff went up, and so that's good. Some of the good news in today's report was real earnings increased about 0.5% in July. Now, that's the first monthly increase we've seen in real earnings in about 10 months.
Wow.
But still,
it's the right direction.
Yeah, it's the right direction, but you got to take it with a grain of salt because real earnings are down about 3% in the last year. And, we expect them, or some economists expect at the very, very best to remain flat in the year ahead. So that means that we've got rising inflation or high inflation, and wages are still being depressed somewhat. That's not the best scenario there.
Yeah,
but we're glad.
That's what makes people really feel the effects of where we're living in right now.
Yeah, we're glad that energy prices came down. We're glad for that. That had to do with really more demand destruction. rather than the government releasing $1 million barrels of oil into the system. We saw both supply increase, not because of that, because manufacturers were still, um, uh, producing more oil, a little bit more oil than they
Just a
were
little
this
bit
time
more,
last
yeah.
year. But we've seen consumers change their habits, and that's the biggest thing. When we start changing our habits and start spending less, that can have a dramatic impact on the economy.
Right.
Last week
So,
we talked about the GDP growth or negative growth. All those things are beginning to add up a little bit.
mhm. So as an economist, would you say that those habit changes are the true sign of a recession?
Well, there's this whole debate, Jesse, about what's a recession. We
Yeah,
talked a
that's
little
why I
bit.
asked that question. Is it data or is it people changing their lifestyles?
No, it's people changing their lifestyles and their spending habits, but and that there's a whole thing there going on with expectations. If we think the economy's bad, then we're likely to hunker down and change some of our habits.
Hmm.
Some of it's inflation related. We know that prices are up. I don't have as much money to spend on gas, so therefore I'm going to consume less. But the idea, and whenever you have the Federal Reserve trying to slow down really the growth in the economy, they're trying to slow the growth in the money supply, and they may do some of those things through some of the tools that they have, like raising interest rates. That can really crush demand.
Hmm.
And I think that's what you've seen is inflation has caused us to change our habits, which was in effect has been minimizing the demand for such things.
So what do we expect the Fed to do with these high but not increasing inflation numbers that came out?
Well, I think there you gotta look at the totality of the data, right? You
Okay.
got lots of things going on. You got GDP was negative. We won't get another GDP reading until after the Fed meeting in September. But I was gonna look real quick to see what the GDP now, the Atlanta Federal Reserve Bank,
Oh yeah, that's an
if they've
interesting
come up
stat.
with their stat. Okay, they do release it to data today, and actually this week they have it pointing up a little more. So third quarter might be a positive GDP quarter. I don't know, but that's interesting. So, but
Yeah.
they have to look at the totality of the data, and Fed Chairman Powell has said that they look at several things. And one of the things that they look at is what is that inflation rate, and this is certainly positive. That things are maybe have topped out in June. We'll have to see. But also, you got all sorts of different factors that are running out there, like the Congress wanting to pass the Inflation Reduction Act, which
Yeah.
actually is going to increase inflation. It makes perfect sense. It's Washington. It's the exact opposite. It's bizarro world in Washington D.C. So you look at the data. You also look at the jobs report from July, which came out last week. That was really kind of hot. It was double what they expected,
Yeah, it was
which i-
it was double. That's significant.
which is one thing that the Fed looks for is to see that the labor market is cooling off. Well, if it's double than what they expected, then that wasn't as positive of a thing. Looking for a reason to slow down interest rate hikes. So
Yeah.
there's a number of different factors here, Jesse, that we have to look at when we're considering what will the Fed do with this data. And we'll still have the August jobs report. We'll still have the August CPI numbers that will come out at some point prior to the Federal Reserve meeting, which I think is the second or third week in September this time
Okay.
around. So anyway, we were talking, reading some article, talking to some experts about things, and we were kind of joking about all the things that we bought during the pandemic that we've grown to hate, that no one wants to use anymore. What were some of the things that we came up with, Jesse?
Well, the big one that comes to mind is the Peloton, right?
Oh yeah, everybody
Everybody
had
to
to have
work
a
out in
Peloton.
their home. It's really a really cool product, I think, and it works out for somebody who doesn't want to ever go to a gym again. But I feel like we're at the point where people are comfortable going to the gym, they're comfortable working out together, and they realize how expensive these things are, and also not to mention the collapse of the company's fundamentals. That's a whole different story.
Yeah, it's a whole different story. Yeah, but what about pets and things like that? That was, a lot of people
Yeah,
got pets.
lots of people got pets. I got a pet.
Mr.
I
Bean.
Yeah, Bean, the little dog. He's great. We won't get rid of him. He's gonna stick around.
So there were a lot of things people started to look back. Buyers have started to look back at their purchases and stuff, and they're beginning to. You're starting to see some of these things on secondary marketplaces. Like there's a lot of Pelotons out there for sale.
I'm sure if you go on Facebook Marketplace and search Peloton, you can get one for pretty cheap.
Probably so. But there's a number of different things. The dog. I hope that shelters are not filling up or anything, but those are some of the things that were popular products during the pandemic. So, Jesse, we're about to come up on a break.
Okay.
When we come back, we will talk about we'll have another episode of our favorite game show, Should I Do That? Making sense of expert, and we're doing it in air quotes, expert financial advice.
We got a good one coming up.
All right. So we're looking forward to that. And of course, we'll continue our conversation later on about generosity. Folks, you're listening to the Spend Life Well Show. We'll be right back. All right, welcome back, everyone. You're listening to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. I am Mark Trice. I'm joined today, as always, by my co-host, Jesse Hamilton.
Hello.
Jesse and I have been talking about some of the things that people were regretting buying during the pandemic. And you might be able to find a cheap Peloton available online on some of those product boards and things. But you probably have your own stories. We'd love to hear those. You can text them to us. Text them to us at 254-282-0495. That's also a number that you can send your questions into, and we will answer those. One of our financial advisors will answer those really quickly when they get that particular message. So, all right, Jesse, it's time for Should I Do That? Making sense of expert financial advice. This is the part of the program where we take articles from popular money magazines or money publications and dissect the expert advice. And I say expert with a little tongue in cheek. We like to have fun with this. We don't want to name these, quote, experts, but we're going to see how much this advice applies to the typical investor. All right, Jesse, go ahead.
All right, so our first individual here, this person is a portfolio manager at a very large mutual fund company that probably a lot of you listening might own the mutual funds and not even know about it. But, So this industry loves their acronyms, right? So this guy's throwing a new acronym called GARP, G-A-R-P, growth
GARP.
at a
Is that
reasonable...
a fish?
It sounds like a fish.
Isn't that those things? Those were the ones with the long beak on there. That's a GAR. Okay,
That's a GAR.
right,
we got GAR and we got CARP.
GARP.
I guess
Okay,
they could
not to be
breed,
confused with GAR. This is GARP. So we're going for GARP.
Going for growth
What
at
is
a reasonable price. So in the market, there's growth and there's value. They're kind of contradictory types of companies. And he's saying to buy growth stocks cheap.
Okay, so buy the dip.
Yeah, buy the dip.
Okay, buying the dip because they're cheap.
Mm-hmm.
Okay, so they going up?
Maybe sometimes.
Okay, well, we don't know.
We don't know.
I got to question sometimes these folks that put these things out here. So, what are they basing this on? Is this because they have a lot of mutual funds to sell? Or they're trying to keep people in those mutual funds because people have been jumping out of those mutual funds, especially the growth ones, over the last 6 months?
It could be. This individual claims that year-to-date GARP funds and GARP stocks have performed in line with the market in a positive way. And they can help they're all weather style, so they're tough, which I don't know if I agree with.
But they can struggle when inflation's accelerating.
Yes.
Okay.
So I don't know how I feel about this individual. I'm sure that GARP works really well sometimes and really not so well other times.
Well, there's nothing wrong with having growth-oriented mutual funds or stocks in your portfolio if that's what you're looking for. But you have to know that with that growth-oriented perspective, you're going to have some volatility, and you will have some really good years and really bad years. And at the trough in June, growth was really struggling. I mean, growth as an asset class was really struggling, and we saw the Nasdaq down over 35%.
At one
even the
point.
large caps were down 24-25%. So it depends. Are they due for a rebound? Yes. Have we reached a market bottom? I don't know. The market bottom may not be in. So you have to ask yourself, is this right for me? It can be, but you need to talk to a financial professional that can actually ask you about your particular situation, your unique position that you have, or perspective, and your objectives and everything else, to make sure that GARP is a reasonable and suitable thing for you as an investor. So, okay, so we got the fish recommendations.
Yeah, go fishing
for investing, and lo and behold, they even have an ETF and a mutual fund that you can purchase.
Yep, based on this
from
advice.
them that will help them look at this. I'm looking at a chart at the ETF that they're telling us about. We don't talk about products or particular securities on our program, but I can tell you the general trend is like this. So it goes down. It goes down through the month of May, and then I went and looked up this particular ETF, Jesse, through the month of June, and it went down even further. So we'll have to see how this one goes. Who's next? Who's giving us the next bit of consumer investor advice?
So our next individual has a very different approach.
Okay.
This person says
this expert.
This expert says the best strategy is defense. And there's such thing as defensive type of investments, but I think this person literally means defense. So
like defense, like defense
aerospace
companies, aerospace, rockets,
missiles, rockets, that kind of thing.
Okay, all right, I got it. And why was that?
They claim that with all the crisis going on in the world, these things have a lot of potential. And in terms of growth, the global economic growth has started to wane. So we should avoid that and stick to these companies that supply
so he's
weaponry
telling us
and
the
whatnot.
opposite of the other guy.
It's essentially the exact opposite.
Okay, so defense sectors. All right, so what do we think about that? Well, okay. I guess that defense can play a part in your portfolio. The thing is when they ask these folks, and I mentioned this last week in the last episode of the Should I Do That program. The last episode I mentioned this is like they're just trying. You get asked by these reporters to make a comment, and you try to come up with something unique, and you hope your compliance department approves it. And this is what they come up with. Buy defense. Well, that can play a part in someone's portfolio if it's suitable for them. There's certain risks that are involved with any type of investment, but we want to make sure that you talk to a professional financial advisor. Who's next, Jesse?
Okay, so this person says that they are a wealth advisor with a very large firm, and they suggest to seek out well-priced inflation hedges. So they say that the biggest movers and forces in the market today are inflation and interest rates, which is a great statement. But their advice is to seek out inflation hedges.
Okay, all right. Well, that kind of makes sense, right? Except for the fact that the stock market is always forward-looking. And those inflation hedges are looking for a time when inflation drops. And so will they remain profitable? Well, maybe so. But you have to realize that that you are looking, and when you buy a particular security or stock, that is a forward-looking price.
Mm-hmm.
And so investors in the markets behave in a way that is forward-looking.
I think this person might be appealing to people's emotions because, especially in this market that we're in, being stable really sounds nice, doesn't it?
Well, stable, and really what they're really driving is aren't you afraid?
Mm-hmm.
Aren't
Aren't
you
you afraid?
afraid that inflation and interest rates are going to get so crazy out of hand that it's going to be like the early 1980s and late 1970s? Fear, fear, fear. That's the number one driver of financial news media is fear about something, or even worse, the FOMO, the fear of missing out. It's still about fear, isn't it? I
Mm-hmm.
fear I'm going to
Definitely.
miss out, or I fear I'm going to be punished for holding a certain type of investment. So this could be value stocks, perhaps, right?
Yeah, it could be things that tend to do well in high inflation environments, stuff like that.
Okay, companies that have good fundamentals. These are all positive things to look at.
Mm-hmm.
So I don't necessarily disagree, except I think that she probably has missed the boat on this one as far as it happening already. I haven't looked to see what the Treasury inflated securities look like, the tips and things like that. So, it could be part of your portfolio if we continue to see high inflation, but you got to be careful. Remember that stocks are always forward looking, and that may have already passed.
Mm-hmm.
Okay, who's
Okay,
next?
our next person, their title is called Darkness Then Dawn. Very dramatic.
Oh, my
Uh,
goodness.
so this person is, in a very roundabout way, not giving any direct advice and just saying, look for cyclical stocks and then time the cycle and get in at a good time based on the movement of different areas of the market.
See, there's nothing wrong with this advice, looking for cyclical type things. But I think what they're really trying to say is that look for the things that have underperformed and buy that,
Mm,
because they eventually have to come around, right, Jesse?
they do.
And that's not the thinking we have here in our offices for the financial advice that we typically give. Because
Well,
go ahead.
yes, definitely. I was just going to say a perfect example is the market sector of consumer discretionary, the things that we want, not necessarily the things that we need.
Sure.
It's been underperforming for a long time this year, and it's recently made a turn. That doesn't mean it's going to continue, but that's an example of something that is cyclical.
Okay. But our approach to money management has nothing to do with modern portfolio theory, trying just to rebalance. And that's what happens in your portfolios if you have them automatically rebalanced. And a lot of times advisors will simply just do this and call it, portfolio management.
Mm,
But they'll basically sell the things that are doing well and buy the things that are not doing well or underperforming,
yeah.
because they go in these cycles. Unless, you're what if you're investing, 7 or 8 years ago in emerging markets? Well, they've underperformed for some time. How long of a cycle am I going to ride when it comes to an underperforming market?
Hmm.
Well, just be careful. Don't buy something just because it seems like it's cheap or it's been down for a while and it'll once make a reemergence, uh, because that sometimes can be years. You want to make sure that you're buying into investments that have strong momentum, and hopefully the momentum will carry them onward
Mm,
even higher. It's kind of the opposite of what we kind of look at here, what the industry looks at in their style of rebalancing is to just basically sell the stuff that's outperforming and buy the stuff that's underperforming. That's called rebalancing, and that's not really the most effective way, we think, to manage your portfolio. All
hmm.
right. So, and of course there are all sorts of things that are making, because even this person, Jesse, talks about that markets typically discount future events, many
Yeah.
months before they occur. This is what we're talking about.
But
And
that's not to say that they think they can predict the future.
that's right. It just means that the market's looking for, like in the last couple of weeks, the market's been behaving like the Federal Reserve is going to start cutting interest rates in next February. I don't think that's going to happen, but then again, I don't have a crystal ball. But that's kind of how the markets have been reacting, and they even reacted to today when we're doing this and this program, because the CPI numbers came out and they were flat. They're still 8.5% year over year. That's nothing to get excited about, but the forward-looking folks and the investors are saying, well, surely the Fed has to slow down its interest rate hikes. I don't think that's going to happen the way people are predicting there. Okay.
Yeah.
So, Jesse, when we got a couple of minutes left, why don't we give just a brief overcap of the markets year to date?
Sure. Let me pull up my charts here, but we're going to start off with the S&P 500, which is the large cap stocks in the U.S., the 500 largest. And as of the time we are recording this, that is minus 11.86 year to date. So it's had a rise. We had major resistance at 41.77. So we will see if it closes above that. But let's move on to the NASDAQ, unless you have a comment on that, Mark.
No, we're really looking at that resistance. 41.77 on the S&P when as we're talking today, that's the major resistance. I think it's above that right at the moment, but we just have not been able to close above that level. If that level is significant, I think there's a potential for more upside in the market should it begin to break out from that. If not, it's possible we have another retracement.
Yeah.
Bear market rallies are very common during a bear market where it just begins to roll over again. So that's the caution I would use. I don't think the bear market is over. I think we got some time to go. Go ahead, Jesse.
Okay, I'll just quickly run through the rest of the indexes. The NASDAQ, which is the tech-heavy sector or tech-heavy index, is down 18.11% year to date. The Russell 2000 small cap index, these are smaller companies that you probably hold a small amount of. That's minus 12.2% year to date. And the last one we'll look at is the long-term Treasury bond fund. It's just not fund, index. It's Treasury bond index, minus 21% year to date.
Okay. So still we're not out of the bear market. We got still a big drawdown year to date. That's not even from the peaks.
Right.
Some of these, like the NASDAQ, peaked last November. And we're acting like there's some momentum kind of go to the upside, but I tell you, be cautious, because that doesn't mean that it's going to continue. So, Jesse, when we come back, I want to take some questions from our loyal listeners.
Okay.
And then we're going to have a conversation about what it means to be generous. I think that that's something that I love talking about how God's generosity can translate to our own lives. Folks, you've been listening to the Spend Life Well show with Mark Trice and Jesse Hamilton. We're going to take a short break, and we'll be right back for the final segment of our show. Well, welcome back to the Spend Life Well show. You've been listening. Today's program's been kind of an update on the news, all the economic and financial news. And in our final segment, we wanted to take some questions from our loyal listeners like you, and also have a little conversation about what it means to be generous in your life. So, Jesse, I know we had a couple of emails come in this week from listeners. I'd like to get those, address those.
Sure. Well, I'm going to cover two today, and hopefully the second question will answer a lot of those emails, because they were all about the same topic.
Yeah.
It's a very hot topic right now. But let me cover this first question. And if you're listening, we're going to talk about your question here. It says, I like to keep 6 months living expenses and savings. That's awesome. But my husband and I are sending my last child off to college this fall, and our monthly expenses are about to go down. Would it be smart to reduce my emergency fund based on our new budget?
Well, Ann, I got a question a little bit here, because you're saying your expenses are going down and you got some kid in college. It seems like it should be the opposite. But I understand what you mean. You're saying that our, we're not having a teenager empty our refrigerator every couple of days or so. I always joke with my wife because I come out from our bedroom in the morning, Jesse, and the door to the pantry is wide open.
Uh-oh.
My kids don't even try to fake it, right? Or they didn't try to like be discreet about it, stealing stuff from the pantry overnight. I come down every morning, the door's wide open. Someone's been in my pantry. I'm pretty sure it's not my dog. I'm pretty sure it's not a raccoon or a possum or anything. It's my kids. So yeah, I understand. You get one out of the house, expenses are going down. I think a healthy emergency fund is anywhere between 3 and really a very conservative emergency fund is up to 12 months of living expenses. So would I go out and spend some of that money down or whatever or invest it? Well, you could, but I think it's good to keep that money for emergencies. You don't need to reduce that necessarily. Maybe you don't have to replace it as fast if you end up using it for an emergency, but you've done a good job of keeping that 6 months of living expenses in your savings account. But I would hang on to that because I can tell you, as you send that last child off to college, there's always some type of expense that pops up that perhaps you didn't think of. Maybe that your daughter or son are getting involved in a fraternity, another activity. I know there were lots of things that I wanted to get involved in college, and of course, they cost money. So I would keep things where they are right now, but you can look at maybe not increasing that as that child goes through college and you get that taken care of. But good job, great job of making sure that you have an emergency fund. And I'm guessing, Ann, that you guys have got college licked just based on the little notes that you left us. So good job, Ann. I would keep my living expenses, or excuse me, emergency fund based on that 6 months of living expenses.
Okay, so our next question, one individual specifically that asked this is Rick, and he's in the Waco area. But several people have been calling our office and saying, are I bonds a good investment? So we've actually prepared some information to tell you guys and girls about, because it's a really hot topic right now.
Yeah, and a lot of people are attracted by the interest rate on I bonds. Now, I bonds, there's kind of a newer version of it. Remember, we used to, you probably don't remember, Jesse, but my grandparents bought me old EE savings bonds.
My wife actually collected one decades old the other month. She just found it.
All right. So they used to issue these paper bonds, and now if you want to buy government bonds like the I bonds, you have to buy them through treasurydirect.gov. That's the only place you can buy them. You can't go to a bank anymore to buy those treasury bonds. And you're limited per person to $10,000 per calendar year. That's all you can put into them.
Right.
And there's some restrictions on the redemptions within the first 5 years or so, but they're intended to be long-term investments.
They're also non-tradable, so you can't just sell it to somebody.
That's right. So the interest rates, which are pretty high right now, at 9.62%, and this will change at the end of September, or actually end of October for November. The interest rates are determined by a combination of two different rates. One's a fixed rate, which currently that fixed rate is 0. And you're thinking, well, that's not that great. The other part is the inflation rate. Now, the fixed rate of the I bond never changes as long as you own it. So if it comes in at 0, it will always be 0 as long as you own that bond. Now, the inflation rate changes twice a year. And the two combined, you add the fixed rate to the inflation rate, that gives you the rate. Now, right now, the current inflation rate is about 9.62%. So that's really good return in an environment where, savings rates at our credit unions or banks are not that great, haven't been for some time. And the I bond seems to be somewhat attractive. However, the inflation rate can change twice a year. So if we think inflation is going to eventually fall, that inflation rate will go down, and thus the interest rate that you're earning every year will go down as well. It's not like a CD. A lot of people hear the 9.62% and thinking, oh, wow, 9.62% for 20-something years.
That's like
That's
9
great.
times what I got on my CD.
Oh, yeah. Yeah, well, more than that, man. So it sounds really attractive, and it's a good rate, but there are limitations. For example, you cannot redeem them in the first 12 months, okay? Then if you redeem them sometime after the first 12 months, but before the 5 years passes, you're going to give up a quarter's worth of interest. So
That's
there are
can be a lot of money.
yeah, there are redemption penalties if you do that before 5 years. And the inflation rate can go down, and it probably will. So one thing that people don't realize is that inflation rate can actually be negative.
Yeah.
So if your current fixed rate is 0 and the inflation rate goes negative, you're actually losing money on those. Now, right now, the inflation rate is 9.62%. That will update this fall. So I think that, these can be attractive things for some investors that have a little cash sitting around. Remember, the max is $10,000 per calendar year. There are restrictions on redemption, so it's got to be money that you don't need to touch for a while. And you have to realize that the inflation rate will vary over the life of the I bond. One other thing, Jesse, is that you can't purchase them with any type of IRA.
Okay.
So your money has to be, it has to be taxable. It can't be a qualified retirement account. Okay.
I'd also read something. I read something online that you can actually tell the IRS to withhold part of your tax return and buy I bonds with it.
Yeah, I have seen that too. Yeah,
And
but
so
you can find that information at treasurydirect.gov. We've gotten so many questions about it. We thought it was important for us to mention that on the air today.
Yes.
That that can be something that might be suitable for you, but just gotta know you got to hang on to them for a while. I think the minimum amount that you can purchase is $25. The max amount is $10,000, and that's per individual or per Social Security number. So, anyway, good question from Rick. Thanks for asking that because we needed to talk about it.
Mm-hmm.
So, Jesse, just kind of shifting gears here, I wanted to talk a little bit about generosity. And we're going to be talking about generosity over the next few weeks or so because it's a very important topic. And I've felt so blessed that God has been so generous with myself and for my family that I think that it's worth talking about. And
yes, it is. Especially in the world that we live in right now, it's really hard for people to talk about generosity and think about their own generosity because, we're all going through a time where things just cost more. People are not getting paid more. And, that the last thing that somebody who's selfishly minded wants to think is, why would I give somebody else my time and money?
Right. And that's not the right attitude because the whole Bible is a story about God's generosity. Think
the
about
selflessness theme, yeah.
Yeah, I mean, think about if when as you're listening today, you're driving to running your errands or taking kids to practice. Think about how generous God has been to you and your family. I know God's been generous to me, and I'm not talking about financially. I'm just talking about the blessings that He has given us so many different ways. You've heard me tell the story on the air, Jesse, about how we began to give on faith when we were newlyweds, my wife and I, and how God has blessed us through that. Not because He, sent us a big, not that we won the lottery or anything like that. It's just because He just blessed us in so many different ways. So I encourage our listeners, let us know how God's been generous to you this year. You can text us, you can send us a message at radio@spendlifewell.com. That text number again, Jesse, is what, 254? I always forget the rest of it. I'm so bad with numbers these days. You put them in your phone.
I'll find it. 254-282-0495.
Yeah, 282-0495. Just send us that message. How has God been generous to you this year? We've got so many stories that people share with us, and it's so awesome. I pulled up a little article. This is, for those of you who don't know, we're sponsors on the bridge of MoneyWise Live, and we love listening to that show. Give lots of great advice, and there's a number of articles on moneywise.org. If you're ever curious about that, we should make sure Jessica links from our website to that one.
Okay.
But this article recently was from Art Rayner, 10 small ways to be generous this summer. I thought it would be cool to kind of share these. Either just small things that people can do to show generosity to others.
Mm-hmm.
And we've all heard the stories about the widow and who gave the 2 small coins, the boy gave a few fish and loaves, or just illustrations of some of these acts of generosity. You don't have to have $1 million donation to anything to show generosity. And there are people that are capable of doing that, and that's wonderful. But I think our attitude in the United States has changed. We see the tax returns of our politicians, and they don't give. They don't give. And I like to hear some stories, but here's some ways that you can give, according to Art Rayner. You can give in a small way to show generosity. Jesse, let's go through some of those. I think they're really
Okay.
cool.
The first one in this article is host people. So that's just leveraging the home that God has provided to you to allow people to have, positive experiences, community gathering. Maybe it's a friend, maybe it's someone who's not quite a friend yet. Just inviting them into your home and providing a meal or a game or something of that sort.
Yeah, and it's so easy.
It's
right?
easy.
Let people bring their own food or whatever. Have a picnic. We get asked to host youth groups all the time, and this year for this fall we're going to be hosting our 16-year-old boys youth group for my son. And you kind of hesitate a little bit because the 16-year-old guys, and there's no telling what will happen to the house. But we look at it and say, this is what God provided a house for us. This is something we should do. Mm-hmm. What about paying for someone's gas?
Yeah, that's a great way to do it. It probably is not easy. It might be uncomfortable for someone, but just without any strings attached, no catch, just say, hey, I want to pay for your gas.
I want to figure out how to do that, because that might alarm someone if I ran up and stuck my credit card into the thing as they're trying to put the nozzle in the tank. How about mowing a neighbor's lawn?
Yeah, that's a good one, especially if somebody has a health condition. Maybe they're aging, or they are very busy. Like maybe you could go find a single mom that needs a yard mowed. Maybe somebody just moved in to your neighborhood and they don't have a mower yet. That'd be a great opportunity to give.
Yeah, I've got an idea now. I've got someone that just moved in down the street, and it's clear they don't have a mower. So we should go help them. How about, there's another one that the author said, how about sending an encouraging letter? Now, this is a lost art form, right?
Yeah, it is.
People don't write letters anymore, and it's very rare to receive a handwritten letter. Send an encouraging note, maybe to a family member, a friend, or even a coworker, and hand deliver that, or send it through the mail. Don't send them an email. Write out a note. You would be surprised about how that generosity can really impact that person's day. Here's a great one. Provide a night out for young parents. We have some young parents in our life group, and we've offered to take care of their young children. They're under 4, and that's always fun. And that can be a great resource for young families. They need a night out. Moms and dads need a night out.
Mm-hmm.
What about donating stuff, Jesse?
Yeah, that's a great one. You can go around your house and find things that are still useful that maybe you haven't touched in 6 months. That's kind of proof right there that you don't necessarily need that thing. A lot of us have closets filled to the brim with clothes, and we only wear a rotation of 5 of them. And so that's an opportunity to donate some unused items. A lot of people need those things.
And you can also teach your kids about the joy of generosity. That was another in this article. Show how joyful it can be to help someone else. Your kids will learn that. They'll remember that. So as you're looking for things to do, even the small things can make a big impact on someone's life. I'm reminded of James 1:5, Jesse, is that if any of you lacks wisdom, you should ask God, who gives generously to all without finding fault, and it will be given to you. As we wrap up today's show, just remember that. Folks, we're going to be talking about generosity throughout the coming weeks. You've been listening to the Spend Life Well Show. Thank you. God willing, we'll be back next week. Have a great day.